Alrighty, it looks like we still have a few people joining in. So what I'd like to do is I am going to start us off with a real quick poll, which I would appreciate if you guys would just answer the questions that you see popping up on your screen there. Give us a little bit more time just in case we have any other folks joining, and then we'll get started with opening prayer. Josh, I see that you've got your hand raised. Why don't you go ahead and just unmute yourself if you have a question?
Hey, Phyllis, Josh. The question I had is, with the survey, it's kind of a twofold because the way we're all divided up on how we do our, orders and stuff within the staff. So I can answer one part of it, but I can't answer the other half.
Okay, well, that's fine. If you don't happen to know, then just don't answer the question. That's fine. I think we'll get a good enough sense of the sort of the trend, so to speak, from the questions that you can answer. Sorry, I should have put a don't know option in there. So
that was what I was asking for. So I was more worried to answer it, and I'm like, I don't know if we did do that part because different duties for different staff members.
Yeah, for sure. All righty. So it looks like we've got most of our folks have weighed in. So I'm going to go ahead and stop the poll there, and then we'll go ahead and get started with our opening prayer and then talk a little bit more about the results. The Lord be with you. Let us pray. Almighty and everlasting God, you have given to us, your servants, grace by the confession of a true faith to acknowledge the glory of the eternal Trinity, and in the power of your divine majesty to worship the unity. Keep us steadfast in this faith and worship, and bring us at last to see you in your one and eternal glory, O Father, who with the Son and the Holy Spirit live and reign, one God, forever and ever. Amen. All righty, well, thank you for being here this morning, taking advantage of the what remains of the gorgeous weather before the heat drives me inside to hang out here on my back deck here for a little while. So in checking in with with the results that we have from our poll here, it looks as though we've got about an even break on whether folks have done a loan forgiveness calculation yet so far. So it's good that some have ventured forth to get some practice. And I do realize that there are some of you who are still, we're all at really varying degrees of involvement, engagement with the process. For some, it's pretty, just getting the loan itself was enough and you're taking a deep breath from that. And then for others, you've had your loans for a while, so perhaps have been able to turn your focus a little bit more towards those forgiveness calculations. So that's not a surprising result. And then the COVID-19 impact statements, I see that we do have a ways to go there as far as getting those developed. So those will be, I think, probably subjects maybe for more in-depth walkthrough in some of our other our upcoming sessions. I would also ask that, if you have other topics, that are of particular concern to you, or things that are, that you'd like a little bit more help with, or even like to share with some of the folks who are here on the call, this is a great venue, great opportunity to do that. So please list those in the chat box when you have a second, so I can plan accordingly for some of our upcoming sessions. And then last but not least, as far as upcoming sessions are concerned, I wanted to let everybody who's here on the meeting today know that we will be taking a break next Monday for a 1-week break. I am happy to report that we are finally able to go see my son and son-in-law, my daughter, and my grandson, and my brand new baby granddaughter, who was born in April, and we have not had a chance to get down to North Carolina to see them. And we're finally going to get that chance. So thank you for all the thumbs ups and the clapping. I feel exactly the same way. I am so thrilled to be able to go down. We're going to leave on Wednesday, and we will be going through the following Wednesday. So we'll be taking a break next Monday, and then we'll get back together again in the Monday following. So that being said, I saw a couple of comments in the chat box about, in the chat space. They were to me privately, so you guys didn't see them. But I do see that there are a few people who said that their impact statement is in drafting, but it's not completed yet. So it's good to know that those are underway. And then Bob Margolski said, would like a copy of the spreadsheet that you used last meeting. So Bob, if you could unmute yourself, was that the AICPA template? Is that the one that you're talking about? Are you unmuted? I don't have my participants list up right now. You are not unmuted. Let me unmute you. I'm having a tough time unmuting you, Bob. Can you try to unmute yourself? There you go. I can hear you now. So Bob Margolski, so did you had a note in the chat box about needing a copy of the spreadsheet that I used at the last meeting? Was that the AICPA template spreadsheet? Is that the one you were referring to? I don't know. I think Bob may be frozen there. I will deal with that. Oh. Okay, so we'll move on. I can't hear Bob. I don't know if it's, he looks like he's frozen on my screen, so maybe it's an internet issue, but Bob, feel free to chime in if that resolves itself. Alrighty, let's see. So, yeah, I see a couple more comments that have popped up about the PPP application also being in progress for some folks, and so it's good to know that you're all in progress on working on some of this stuff. So I'm going to start us off today by just an update. I'm going to start sharing my screen with you, and okie doke. So we will start here from the beginning, I hope. Okay, so we'll do this. This may look very familiar, but I promise you I have updated it. It's not the same one that we did last week. So we do have updates, obviously, over the last week. Many of you may already know this, that the HR 7010 bill, which we reported on and kind of walked through last week, that was passed by the House of Representatives, was passed by voice vote in the Senate on June 3rd and signed into law by the president on June the 5th. So it is officially law at this point in time. It passed through very quickly. I am not aware at this point in time that there were any changes from the basic parameters that we talked about last week. So everything that we talked about last week, as far as getting ready to sort of prepare for a 24-week forgiveness period, as well as, perhaps thinking about which period benefits you the most, still stands. I'm happy to say there were not a lot of changes to that. So just really running through, very quickly where we are, as quickly as I can. this extension of the 8-week period to the earlier of 24 weeks or December 31st. So again, like they had initially put that June 30th deadline in there, now they've moved that to December 31st. So the covered period, what you'll hear them talk about in, you'll see the terminology used, the covered period, it would be the earlier of 24 weeks from the date that you received your loan or December 31st. So again, envisioning that this is now being seen as an ongoing program. There's still money out there. There are still being, applications that are being put in. So, that for folks who, get their applications in later in the year, they're not going to have a full 24-week period. They're only going to have until December 31st. So that is something to bear in mind. And because for those of us who, had our loans in prior to the date of enactment of this, so the date it was signed into law was June 5th. So anybody who got their loan before June 5th can choose whether you want the 8-week period or the 24-week period. That really hasn't changed. You just need to remember that whichever period you choose, that your maintenance of workforce and wage reduction requirements apply to that period. So if you only want to have to worry about those things for 8 weeks, and you can successfully do that, then, in many cases, actually, it may make sense to stick with an 8-week period. However, it is good to know that you have 24 weeks in order to make up all of those, the payroll cost and other cost requirements to achieve full forgiveness of your loan. You have a longer time period to do that now. So that's basically the first provision. The second provision, and this is important, is that what used to be a 75% payroll costs test is now a 60% requirement. Okay, so the old law told us that forgiveness of the loan would be proportionately reduced to the extent that other costs, which included permitted rent, utilities, and interest on secured debt, exceed 25% of total costs. Okay, so the old law said 75% of the total costs that were allowable for forgiveness, 75% of them had to be payroll costs, or your forgiveness would be proportionately reduced. Okay, that has now changed to say the new law says that at least 60% of the loan amount must be used for payroll costs, or you forfeit forgiveness altogether. And that's a really important clarification. So basically, what was now sort of a 75% ramp has become a 60% cliff. Okay, so if you don't get to the 60% level with, at least 60% of your total forgiveness costs being payroll costs and not those other kinds of costs, then you forfeit forgiveness on your loan completely. Okay, so it's a very important differentiation. Now, I know a lot of us were already aiming at 75% and figuring out how we were going to get there, using the relaxation of the types of payroll costs that we talked about before. And when I say relaxation, what I mean is to remember that we are allowed to use payroll costs, and payroll costs include not just your payroll compensation, but also your retirement benefits, employer paid retirement benefits, which for us is pretty much all of it, and your health and dental insurance costs. We can use all of those costs in the covered period. Again, remember, that's now 24 weeks if you choose. Okay. You can use all of those types of costs, whether they were actually paid during that period or incurred during that period. So if you paid a payroll that was incurred, either before your covered period started or after it ended, I should say before it started, then you can count the full amount of that payroll, okay, that you paid. If your covered period started on, May the 4th and you had a payroll on May the 7th and it covered the period all the way before, May the 4th, you can count that payroll because you paid it after you got your loan. And then likewise on the other end, if you have payroll that you incur before the end of your covered period, but you pay it immediately after in your next regular payroll period, you can count that too. And that also goes for some of the other costs as well. So they've really relaxed, how you can actually, bring these costs in. But at the same time, they're saying after all of that, if you can't make 60% of your total costs be payroll, then you're not going to get forgiven on any of your loans. So that's how all of that kind of works together. And then there is one remaining open question now that they've extended the payroll period. You may remember that there was a per employee compensation limit of $100,000 on an annualized basis. So if you do the math on that, they had incorporated into the provisions the 8-week section of that, which was just a little bit over $15,000, saying that there would be no more than 15,000 and change, whatever that number was, that for any one employee that would count for compensation. This is now exclusive of retirement and health and dental insurance. So they didn't change that calculation. And again, I think this is just an administrative housekeeping thing. We're going to see them change it, to $46,153 per employee, because you're now covering a 24-week period, not an 8-week period. So again, it is an open question. It's one of the ones I think they're going to be correcting with some of the administrative housekeeping that will go on after this settles a bit. And you'll forgive me for I'm going to go through these first before I take a break. I do see that there are things popping up in the chat space, and I'll get to that as soon as I'm done. The deadline, as I mentioned, for calculation and penalties for reduction in workforce or wage reduction, as I mentioned before, has been moved from June 30th to December 31st to follow that 24-week period for calculating the forgivable costs. And it does appear to extend what they call the amnesty rehire date for calculating and comparing your full-time equivalent employees. It extends that date from June 30th to December 31st. Now, there's still a little bit of ambiguity around that. It's in the legislation itself, it's unclear if you can try to cure any kind of deficiency you might have in your number of full-time equivalent employees anytime before December 31st, or if you need to have the same head count on December 31st as you had on February 15th. So again, we're coming back to a place where the wording in the original CARES Act, which said not later than June 30th, 2020, still needs to be corrected. And again, I think this is an administrative thing that we're going to get more clarification on as time goes by. Number 4, the exception that preserves forgiveness. There is an exception that preserves forgiveness for those who try to rehire but cannot. And these are the three things basically that you would have to document. It would have to be an inability to rehire your prior employees, coupled with the inability to find qualified employees to replace them, or if, and this item C, as I mentioned last week, would be the one that would be more likely to apply to us, is that if we were unable to restore pre-virus levels of activity due to physical distancing or other federal health guidance, which I think we all know from our first, we've seen a little bit of the first round of guidelines that are coming out that are, still making it pretty much impossible for us to worship in a building in the same way that we used to. And that is likely to go on to some extent for quite a while. So we could find ourselves, in a position like item C here, if we need to use the exception for that full-time equivalent employee rehiring requirement. So good to know that that's out there. The repayment period for any part of a loan balance that is not forgiven, it has been extended from 2 years to 5 years for it's automatic for any new loans after the date of the enactment of this act. So after June 5th. Now, most of us, we already have our loans. So it says, for any existing loans, then the lenders and the borrowers can mutually agree to modify the existing terms. So that would basically, what they're saying is, for those of us who have loans now, we can negotiate that with our banks, the banks from whom we got the loans. The interest rate still remains at 1%, accrued from the date of the loan and forgiven only to the extent that the loan is forgiven. And then we had a bit of a clarification on this item number C from last week to say that the repayment can be deferred until the date that the amount of forgiveness is remitted to the lender. This was much more specific language than we had last week by the SBA. So you might recall there used to be a 6-week deferral. 6-month deferral. You could defer your first payment on any any remaining balance that wasn't forgiven until 6 months. Well, they've extended that now so that they're saying that once you basically go through your forgiveness application process and you submit your application, it gets reviewed by the bank, then it gets reviewed by the SBA. And then it's not until the amount of forgiveness is actually remitted to the bank. So once the SBA reviews your application and actually makes that forgiveness payment to the bank, you can defer any other payment on any other remaining balance until that time. So that was a little bit more clarification than we had last week. Borrowers do have to apply for forgiveness within 10 months, which I would want to do that anyway. I mean, I'm not going to waste any time, once we get to the point where I know that we've cleared all of the, the requirements and I can successfully apply. I have no intention of waiting for 10 months, but there is a 10-month deadline after the last day of your covered period, which could be December 31st, so that would mean that, if you take the maximum advantage of the covered period, then you would have to apply for forgiveness by October of next year. And then there still is, again, a remaining housekeeping question. Can you apply for forgiveness at the end of the 8-week period rather than having to wait until the end of the 24-week period? And that's one that I will be actively continuing to watch out for, because that would be my intention for ours, if that's possible to do. And I understood prior, like last week on the House bill, that was in fact going to be permitted, that we would have a choice. And the one source that I have tended to rely on most for some of the authoritative guidance, which is that nonprofitcpa.org, the accounting firm that actually runs that website. They have not come out yet with their updated version of their very detailed outline guidelines. So once that comes out, I'm expecting that they're very good about providing examples. And I'm sure that's why theirs has not come out yet, is because they want to make sure that when it gets out there, it covers all of these things to the greatest degree it possibly can. So I'm expecting that'll be out maybe in the next day or two. And as soon as it's out, I will replace the current version on the website. We talked a little bit, last week about the other benefit that the federal government had offered, which was the ability to defer the employer portion of Social Security payroll tax. Again, for us, this would only apply to our lay employees, not our clergy, because they are under SECA. Previously, we were not allowed to take advantage of both the PPP and this deferral of employer portion of Social Security. So as the year goes on, and we get past the period of time that's actually covered by our PPP loans and cash flow, again, that's part of the reason I keep asking the questions about the cash flow statements, the impact statements, is that they will be very important to make sure that we are planning our cash flow in order to make it through this period of time, and until we, have a better idea what it is that we're moving into. And this could be a tool that you could use, if you're running into cash flow problems. You would have the ability to defer the payment, and you'll see this on your 941 forms, or you could talk to your payroll company about it, so that when they are either, taking the money from your account for your payroll, or you yourself are paying, your federal tax deposits or your 941 balances, there will be mechanisms within there to be able to allow you to defer those portions. And then, you would need to pay 50% of whatever you defer by December 31st of next year, and then 50% by the end of 2022. So that is out there. Again, it's not a huge, impact thing for most of us, because we don't have that many lay employees, but it is out there. So it's good to know. And I'm not going to go into this too much. We talked about it last week because, IRS deductibility of expenses that are paid with forgiven PPP loans really is not an issue for us. We are tax exempt, so we don't have to worry. But whatever determination they make there could impact how we have to account for things on our financial statements. So as that gets clarified and updated, I will, I'll be, updating everybody on that. So our principal takeaways are pretty much the same as they were last week, only now it's not for now. I put a bracket for now around it last week, but these are basically, now they've been enacted into law, is that, again, doing the evaluation based on your expenditures to date, and what you anticipate is your ability to maintain your workforce, to really consider carefully whether the 8 or 24-week forgiveness period makes the most sense for you. And most importantly, consider what you need to do to ensure that your payroll costs are at least 60% of your total forgiveness costs, because that would really be kind of devastating to a lot of us to not make that and then have to repay the entire balance, not even have any portion of it forgiven. So with that, I will go ahead and stop the share for now and get back to our chat space, because I see it's been pretty busy in there. So give me a minute to go back through. So I think if I'm back up in the right place, I have a question from Colleen Brooks. Are we still required to have staffing from February 15th onward look no different to qualify for forgiveness? Yes, Colleen, my understanding is that February 15th is still the date, the comparison date on the beginning end of the period. It's just what's in question now is the comparison date at the end of the period. Does it have to be December 31st, or will there be, for those of us who want to apply for forgiveness earlier, will we be able to use that, that date immediately after, after we, when we're ready to apply? I did have a question that came to me privately, asking, does this include the equity allowance and back due SECA payments? So if you have anything like that, yes, anything that you pay that's compensation within your 8-week period qualifies. So if you do have any back payments that are due for anything, I know that some of our congregations, rather than running the SECA on a routine basis through your payroll, pay it quarterly. Not only can you catch up back payments if you haven't paid it yet, you could prepay it if you wanted to. If that helps you get to the forgiveness level that, to be able to achieve 100% forgiveness on your loan, you can do that. Colleen was asking again, the starting date is the date we received the money, not the date of bank paperwork, correct? And yes, that is correct. The other thing that we talked about that had happened just prior to this new act, so about 2 weeks ago, the SBA had come out with guidance And basically what they were rules and guidelines rather than anything that was actually enacted into law, to say that the covered period can also you can elect a different covered period that starts on the first day of the payroll period following the date that you received the money. So you have a choice. Okay, you can start the covered period on the date that you actually received the loan proceeds into your bank account, or you can start your covered period on the date of the first payroll after that date that you received the money into your bank account. And I went in through a little bit of example last week that showed for me, basically I went through an example of how that works for me on our diocesan payroll schedule. And it actually worked out that it was much better for me to start my my covered period as that alternative covered period on the date of the start of the pay period after I received my loan. So I got my loan on May the 4th. My first pay period was after that was May the 10th. And so if I decide I'm not going to start my 8-week period until May the 10th, then I get to count all of my payrolls with, starting from 1 week later. So I've effectively extended, my 8-week period to a 9-week period. So as I was mentioning that I had my pay period actually ended up giving me a full extra week on the end of my covered period that allowed me to effectively get 9 weeks out of my 8-week period and actually be able to include payroll for an entire 10 weeks. So I actually got another full biweekly payroll period in there. And so that actually benefited me quite a bit and it got me to the point where with that added in there, my payroll costs were about 90% of of the total costs that I was allowed to use. So, so that, really helped me out quite a bit. So let me scroll back here and see. So Mark McMahon was asking, is the incurred proportional to the number of days? And yes, Mark. So when I was looking at that incurred period at the end, uh, if I had started my covered period at the regular May 4th time, I would have only had 1 week worth of incurred payroll at the end of my 8-week period because of the way my pay periods run. And so I would have only been able to take advantage of that 1 week incurred payroll, but I would have been able to take advantage of that. But by moving my alternative covered period to the next week, to May, basically another 6 days out, May the 10th, I was able to effectively get an entire 2-week biweekly payroll period in as incurred. Even though it was paid the next after my covered period actually ended. So yes, the incurred is proportional to the number of days. Ellen Peterson was asking, is the payroll cost gross, including Social Security, or net? So payroll cost is gross. So you do, especially for your your lay employees, obviously this is going to be more, that for your clergy, this wouldn't really matter because we don't, take Social Security out for clergy, but it is gross. So whatever whatever the hourly rate is, whatever the salary level is, it's that gross salary level. And then Greg was asking, so if we are having trouble achieving full forgiveness, it might be to our advantage to use the 24-week period. Yes, it might, and especially for those of us who, for one reason or another, maybe because of how our clergy were employed, maybe we were in transition or, whatever, actually were able to get a loan based on the 2019 payroll cost, able to use towards your forgiveness, then you would have a longer period. So if you had clergy last year and you got a larger loan, and you are your payroll costs are not quite as big this year, then you would be able to. So anyway, if you had a larger payroll, in 2019, and maybe now you're on supply clergy because you're in transition, then expanding that 8-week period out. So not that you could include your supply clergy if they're on 1099s, but it would give you a longer period of time for all of your other payroll, and any other of your payroll costs that might, that might help you. So yes, definitely, it would be to your advantage in that case to use the 24-week period. So John Tate was asking, if you fall short of the 60% payroll costs by a minimal amount, say less than 5,000, but satisfy the 40% other cost threshold, is the loan still not forgiven? My understanding, John, is yes. It is still not forgiven. So I think we really need to make sure, that the payroll costs are at least 60%, of the forgiveness costs, which basically means 60% of your loan, because I know all of us are shooting for 100% forgiveness. So yeah, it would actually be a shame. It could be $10 less, and they would be able, under the law, the way that it's written right now, to completely not forgive your loan. So Ted was asking, what's the impact if your full-time equivalency goes from 2.0 to 1.5 and stays at 1.5? So if, again, it would depend on your dates, of when all of this is happening and why. So if your full-time equivalency went from 2.0 to 1.5, and you could demonstrate that the reason that happened was because of a revenue, your inability basically to sustain the level of activity that you did, prior to COVID-19, then you could use that as an exception. And that would be a valid exception, I think, in our case. So, if that was the reason behind why the full-time equivalency was reduced, is because you could not sustain it due to the revenue impact. And here's where our impact statements, again, I know I sound like a broken record, but they're just so important, that, it's, it would be, it would be, useful for you to have that, to be able to prove that this was why your full-time equivalency went down. But if you weren't, if you didn't for some reason qualify for an exception, then the impact would be that there would just be there would be a reduction in the amount of your forgiveness, not an elimination. Okay, not like I'm talking about with the 60%. In this case, it would be a reduction. And it would, that there are calculations, I think, already I know there are calculations already in that one. I mentioned the authoritative guidance that I got from the nonprofit CPA firm. It's listed on the website in the finance info section. If you scroll down underneath our pledge and plate recovering and growth stuff, you'll see there's a section there for government assistance. And in that section, there's a whole like 5 or 6 bullet points worth of information on PPP forgiveness. One of those says ECFA guidance. That's Evangelical Council on Financial Accountability. And that's where this firm comes, that's where they publish a lot of their stuff. And so they end up, their most recent guidance in there, and there are some detailed examples that go through the calculations of full-time equivalency. And so I would suggest that you go there if you have a question, and take a look at what they lay out there and apply your situation to it. And if you still are confused or are having any trouble with it, then, let me know and we can walk through it together. And so Bruce Weiss was asking, I'm still not clear, is the full SECA for clergy eligible in the forgiveness calculation? Yes, it is. And the reason that SECA is eligible in the forgiveness calculation is because it's considered compensation. It's not considered an employer payroll tax because, again, of the special status of clergy. So because we pay that to them so that they can pay their own self-employment tax, it's considered part of their compensation. And yes, it's fully includable in the forgiveness calculation. Uh, so Greg was asking, do we need to declare in some way if we are using the 8-week or the 24-week period? I would imagine that we do. You know, I can't see how they would get, get around it any other way. I think probably what will happen eventually is that, again, they came out with their first draft of the forgiveness application and form itself, which we took a look at last week. And again, it's posted on our the website in the same section underneath, in those bullet points. They will come out with revised versions of that form as the time comes, and I would imagine that there will be a checkbox, up there. Because again, they still have to clarify a few of those things about how soon after the 8-week period we can apply. That's not clear under this new Flexibility Act that just passed. So that's one of the things that I'm again looking for more clear guidance myself, either from the ECFA or from the SBA as that comes out. Let's see. And so I had a question privately about does the cost for an interim priest count as additional payroll costs in loan forgiveness? And so, as I've said before, the differentiating line, a bright line differentiation for what you can include and what you cannot include for clergy is whether you're reporting them on a 1099 or whether you're reporting them on a W-2. And for interim priests and even some of our long-term supply priests who we have on what we call supply plus types of contracts, they have a letter of agreement. They're not just being paid the normal supply rate for showing up on a Sunday and doing Sunday services. They're oftentimes doing other things like maybe a little bit of pastoral care or having some office hours or, maybe doing some formation stuff, but they are on a letter of agreement and not just being paid weekly to do Sunday services. Supply clergy are typically paid just for the Sunday services. They're not paid, they're just paid for the Sundays they show up. They're not paid on a routine like payroll basis. So that's really that bright line division. If you're not paying them on payroll, then you can't count them. But if you're paying them on payroll, even if it's long-term supply plus, then yes, you can count them. And I think I already, if the 2020 payroll cost is actually bigger than 2019 due to some of these types of charges, then, basically all that means is you should have a much easier time, making those total cost and payroll cost requirements. I see Colleen had said that she had some technical difficulty and didn't hear the response to her question. So Colleen, what I'll do is I'll make sure I put those in an email to you privately after we're done, because I'm anticipating with the volume of questions and information and our little unscheduled interruption that we probably won't have too much time to repeat them. So I'll take care of that. And I think that takes care of all the questions that we had in chat for now. Is there any other, any other questions? If you want to either raise your hand, you guys have been great about using the chat space. I really appreciate that because it kind of helps me make sure that I get everybody taken care of. Is there anything that I haven't, anybody's questions I haven't covered at this point in time? Okay, doesn't look like there is. So I am going to go ahead and bear with me just a second because I do want to share my screen with you, but not the one that I was sharing before. So let me get my links up here. We had, so right there. Okay, so here's our own lovely diocesan website. And I just really wanted to, as long as I have you here, make you more aware of where these things live in case you didn't know. So there's a couple of different places. You saw the slider thing on COVID-19 resources go by, but this menu item is always up here. And so if you see the drop down menu here, you see there's a place just for finance info on the website. So if I click through on that, it takes me to this page, which again, we have our, pledge and plate recovery and growth plan information here, which ties to our Tuesday night and Wednesday morning workshops that we've been doing, which are very helpful. So if you, want to go back through any of those, they're there. But then the government assistance section is right underneath. Okay. And so we had the slides and everything from last week's version of this, where I kind of went over everything that I went through today for the first time. Only in that particular presentation, we weren't, we didn't know for sure that the loan was going to be passed yet. And my slides, are also posted here from last week's meeting. And I will be posting my slides from this week's meeting here too, or, when I, as soon as we're done. And so then down here, as I mentioned, here are all of these resources on PPP loan forgiveness. There's as I referred to, the AICPA loan forgiveness calculator form that I owe a debt of gratitude to Maggie Rayner from St. George's in Rumson for forwarding that through to me. It's a very thorough workbook comprised of worksheets that sort of pour into each other. I'll, just kind of put them up here really quickly in a moment so you can see what I mean by that. But that is here. The Small Business Administration PPP forgiveness application itself is here, along with all of the instructions that the SBA put out along with that form. Again, with the passage, this application actually, I think, was put together before the passage or even the contemplation of this act that just passed in the last week. So I do anticipate that we will be seeing some, adaptations of this form, but I also anticipate it's probably going to remain substantially the same. There are going to be date changes and, everything else that have to go along with it. There's a forgiveness analysis template, both in English and Spanish, which I will also show you really quickly what the spreadsheet version of that looks like before we get off. Here is that loan forgiveness authoritative guidance that comes from the ECFA. And so you can, they are very helpful, especially in the areas of wage reduction and full-time equivalency, in walking through very specific examples. So I would recommend that. And then, as I said, if you're running through those examples and you're still not sure, then please don't hesitate to reach out to me. And then last but not least, we've got this Kaplan Financial Education PPP loan forgiveness instructions, which came out at the same time that the SBA forgiveness application came out. So I put them up there because there is still a lot of helpful information in there. I would imagine that's probably going to be getting updated too. So those are the resources that are there for you to actually walk through some of these calculations. And then I will also share the sample calculations, basically the forgiveness template that's up there, pretty much walks you through a calculation, kind of a back of the envelope, more of a back of the envelope than just a whole, formal thing like the AICPA does, where you can literally just kind of walk through. This template here was based on an example that I provided earlier on, where I just took when we were actually doing the application process for PPP loans, where I just took a generic example with a priest, a parish admin, a music director, and a sexton, with these different levels of compensation, with different health insurance and dental insurance premiums and retirement costs. And so I just extended those figures through to show how the forgiveness benefit would work. So again, all of the stuff that's in here, that's posted up here right now, is, based on an 8-week period. And, I will be, now that we actually are official, on the 24-week period, I'll post another one that shows what it would look like for 24 weeks. But this one was, this one was developed, before that actually became law. So that is the example that's posted on the website for that particular, that particular situation. And then what I also did is I went ahead and actually carried those numbers through the AICPA form itself. And we went through this kind of exhaustively last week. And again, you could, if you need to see that exhaustive sort of walkthrough on this, it is on the recording that's posted on the website. And so you could go back and take a look at that as we walk through these forms. But basically, it really takes you to, once you get to the point where you are getting to this top form here, which they call their forgiveness calculator, this is meant to literally mirror the SBA's own form. So once you get to the point where you're successfully populating all the fields that are here, you're pretty much ready to take whatever's here and put it on a forgiveness form. And as you can see from the key up here at the top, that there are only some things that you actually input on this form, and then there are other things that come from other worksheets. And so, the first thing that we ended up putting in here that you do have to enter in is the disbursement date and your alternative payroll covered period date, which is the date of the first payroll period following. And the other thing that you can see here, even just from this very brief example, is that they are great with their explanations around the boxes to tell you, what does this mean? Well, what does an alternative payroll covered period date mean? Well, there's your explanation. And they tell you in the areas where you've got numbers pulling through from other places where they're coming from. So it's important to remember that you should only ever be entering stuff in here in a blue cell. If you enter something in a different cell, you're going to screw up the formula that allows it to either calculate or pull through. And again, you can see down at the bottom that there are lots of really, really helpful notes here. So this is what the forgiveness part, the actual application would look like. There's a Schedule A that goes along with it. And again, this worksheet is designed so that once you get done with this particular worksheet, that you would have what you need to literally enter this on the Schedule A. And then there's also a Schedule A worksheet that the SBA did. So again, this is the same thing. This is what your own version of the Schedule A worksheet would look like. The worksheet itself is not something you have to file with the SBA, but it is something you have to keep for yourself. And then you can see there is a non-payroll costs tracker, which is where you would enter in. And so here you see the importance of entering in the dates on the front page, because what it did for me is it said, okay, I have chosen my alternative covered date. So it broke down everything for 8 weeks from that covered date. And obviously now we're going to be able to break it down for 24 weeks. So, I'm sure this will be being updated too. But for right now, it's good methodology, to go through to figure out how all of this applies to you. And then once you get down to these green shaded fields here, these are numbers that pull through to one of those front worksheets. The payroll accumulator is where you put in all of your compensation costs for your employees. They ask for your first quarter of 2020. That's going to be a comparison period. And as far as I understand, that has not changed. So these numbers you would be putting in from your first quarter 941 forms. And then the numbers that you put in further over here for your covered period or your alternative covered period, then help them to help you compare the covered period or the alternative covered period to the base first quarter period to see if you have any problems with salary reduction. Okay, so this is different than full-time equivalency. This is if if anybody had their salary reduced more than 25%, that could also impact your forgiveness. And this worksheet helps you calculate that. So that's that one. And then here again is your full-time equivalency input sheet with lots of notes, that helps you to figure out, do you have an issue with full-time equivalency or don't you? And so that's what this, as I said, very thorough, very explanatory, very helpful worksheet, helps us to walk through. And then last but not least, we have, I just wanted to show you this guidance that I keep talking about that's posted on the website. This basically is it. And you can see here, as I'm scrolling through really quickly, that there are, examples that go along with all of this. It talks about how you have to, spend the funds, and then it literally gives you examples down here. Types of costs that count toward the forgiveness amount. It goes into very detailed explanations all the way through here. And again, it gives you examples. Okay. And it talks specifically about things like interest, but not principal on mortgages or other collateralized secured business loans, what qualifies for business lease or rent payments, utility costs. It also goes through that paid or incurred, so it walks you through that. And then it gets you into, the wage reduction element of that could impact a reduction of your forgiveness amount. And it walks you through, different ways of how you apply that very specifically. Okay. And again, you can see the directions, the examples here are very explicit. So it really helps a lot. They go through them for hourly workers and salaried workers. And then they also do a section on full-time equivalency reduction. Okay. And it talks about the safe harbors, which may, result in you qualifying for an exception from reduction. And then it, walks you through all of the steps and the calculations that you have to do. And so again, just very helpful guidance that's given here. The one that you'll see that's on the website right now is still the 8-week one. As I mentioned, this Batts, Morrison, Wales, and Lee, who's the CPA firm that put this out for publication on nonprofitcpa.com, which this ECFA uses as their authoritative reference. I assume, I would imagine they'll be getting an updated version of this out as quickly as they can. So let me just check the, I see, let's see, I do see that. Okay, so still confused about how the alternate period might or might not impact our payroll, which is monthly. Greg was asking. Yes, Greg, we could certainly talk privately. I'm going to make a note of you as well, and we will make arrangements to do that. And then Barry, same for you. I'll get in touch with you. One-on-one to go over those timing, what I'm talking about with the timing stuff. Yes, this meeting is being recorded. And any of you can, if you click down at the bottom of your screen, you'll see an icon for participants. If you click on that, I'm sorry, wrong one, chat. You'll see the icon for chat. You've been making great use of it, so I think most of you know where it is. If you pull up the chat screen, okay, or the chat box, you'll see down at the bottom right, okay, and you might have to look a little hard to see it. There's like a little box with 3 dots in it. We call that an ellipsis. Okay, if you click on that ellipsis, it will pull up a number of options, one of which is Save Chat. Okay, and if you click on Save Chat, it will save it as just basically a generic text file. You'll get a notification as soon as the meeting is over that the meeting chat has been saved. And so you can, you can go ahead and use that to save the chat. I'm going to have to, work with Steve a little bit on actually getting this recording up, because obviously I'm going to have to try to get rid of the or unintended interruption there before we would be able to post this. I have another version of this meeting that I'll be doing with folks tonight for the ones who can't attend during the day. And if that one goes cleanly, then I will, then I'll probably go ahead and post that one. But one way or another, I'll get that stuff posted up there. And I think that took care of that question. Given the 60% cliff, will we have to report all expenses which are eligible for coverage, not just those which we plan to report, even if we wind up below the 60% threshold? So basically, what you would need to do, if I'm understanding and interpreting your question correctly, John, that what I would do is I would basically, start with all of, you're not required to report all of those types of expenses, that occurred during your forgiveness period. You would, what I would start off with is my payroll expenses, and then I would, basically only report other costs up to make sure that I'm still
Yeah.
more than 60%.
If you get to pick and choose, it's easy.
Yeah, you can do that. But you might still end up, in that you might have that situation where you don't get to 100% if you do it that way.
If you take the 24-week, you certainly would.
You could,
I mean,
absolutely.
You've got to with a 24-week period.
Yep. Yeah, so that's what I'm saying is I would just take, I would take my payroll costs.
Yeah. If you can pick and choose, it's easy.
Yeah. No, you just have to prove that you paid enough to be able to offset your loan amount. And that could be 100% payroll costs if you're using a 24-week period.
Hey, Phyllis, a detail for me. I think we're paying some mileage. Do you think that is deductible, is eligible for this?
No, that's not compensation.
Okay.
Yeah, no, that's unfortunately. And so I see that, that Colleen and Ann are both having trouble finding where to save the chat on their either cell phones or iPads. So again, it will automatically pop up for me as soon as I'm done this meeting. So Colleen and Ann, I will make sure that I get those things to you. And with that, unless I'm missing I don't think I'm missing any other questions. So I think that that'll take care of it for now. So again, thank you guys so much for being here. This is just such an easier way for us to be able to, disseminate this information. And I am, looking forward, once we reconvene in a couple of weeks, to having these kinds of sessions be much more interactive. So I would encourage you, as I did last week, only I didn't know that they were going to actually pass this thing and we were going to go back through, some of the other details just to make sure we were all clear. But I would actually encourage you to please, go through these calculations, come back in a couple of weeks, with your questions after having actually gone through them. And then, then we'll have an opportunity to be even more interactive with each other and share, share the things that we've learned, the things that we still have questions about, all of that good stuff. So until then, again, thank you all very much. Thank you for the good wishes. I will indeed enjoy my time with my family very much. And I'll look forward to seeing you guys again in a couple of weeks. Take care.